Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. We're going to go through Twitter, see what people are talking about on Twitter, social media. It's going to be financial topics, wealth building topics, and or commodity related topics because I think that's where the value's at over this next secular bull market in commodities over the next decade. So let's dive in here. Let's take a look and see what people are talking about. It's at Finding_Finance if you want to follow me. And we've got a discount going on for finding-value.com. It's Turkey. Turkey is the discount code. You can see the discounts in the description link below. Let's see what people are talking about today. We've got, never go against the Zweig breadth thrust. Some serious bullishness just began this month and likely to follow through well into 2024. I know there's a lot of people talking about recession, slowdown, things not working out too well, in the markets. And here is a rare bullish signal just triggered. So I don't know what this is, the Zweig breadth thrust ZBT signals since World War II. So whenever we get these signals, these are the following returns in the S&P 500 on a 1 month, 3 month, 6 month, and a 12 month. And look at how bullish they are. So maybe a lot of these people are early in their bearish calls. As this ZBT signals very large 12-month returns in the S&P 500. The average on the 12-month is 23%. So that is very bullish on this Zweig breadth thrust signals, which we just got. Coming on down, we got, is the 10-year Treasury yield about to make a resurgence? So we've got a falling wedge in TNX, which is yields, and we have a rising wedge in bond prices. And obviously, they are inverse of each other. So that very well could be the case, and that would also signal strength in the economy, not weakness. Strength in stock prices. So kind of interesting here, as a lot of the data is going against the recessionary crowd. JC Parrots, he says, they want you to be depressed as they are. That's why they're not pointing out that U.S. financials are making new 8-month highs, best levels since March. We've got this squeeze going on in the financials, and they are breaking to the upside. This is exactly what I look for in technical analysis. I look for breakouts of downtrend lines. So we've got good support. That's the gray area there. And we've broken the downtrend line on to the upside. Now, does that mean that we should go buy a bunch of S&P 500? Does that mean that we should go buy a bunch of financials? Not necessarily. If the markets start ripping to the upside, I think that it's not necessarily a headwind for commodities. Commodities can still outperform the S&P 500, and the S&P 500 can still go up 20%. So I'm going to sit where I'm at. I'm not going to sweat anything and ride through this. And if we get a bullish sentiment in the market, I think it's actually going to help us. I think it's going to kick off a very big move in oil and energy. Uranium. I know people like to hear about my opinions on uranium. I think it could all massively go up. Game of trades, copper is breaking out from a 20-month downtrend. So this is interesting, right? We've got the S&P 500, the ZWT, was it ZWT or ZBT? I can't remember the ZBT signals this big move to the upside, right? Then we also have copper breaking to the upside. So it says a weakening dollar is boosting copper prices as market anticipates a stop to aggressive monetary tightening. This would drive global demand for copper, which is also heavily depends on China. So we're breaking to the upside in copper, and we're starting to see all these things fall into place. What about the recession? What about the pullback? What about all of those things? All I'm going to say is I don't know if we're going to get this gigantic recession that everyone's talking about. The charts are suggesting that we are going to go higher, not lower. And that includes multiple sectors, S&P 500, the financials, copper's breaking to the upside. It's hard to paint a bearish picture if everything economics wise is indicating a move to the upside. But again, maybe it doesn't work out that way. It just looks like it to me. Here's Uselink. This is gold. And another thing, gold can also signal more inflation. Maybe the slowdown is behind us, and maybe there is more liquidity entering the market, and people just aren't recognizing it. I don't know. But gold at the beginning of this could move to the upside, much with Bitcoin as well. We've seen Bitcoin heading to the upside, and I think very well that gold can move to the upside as well, signaling maybe a new liquidity cycle. And I know this seems weird. I don't know where the liquidity is necessarily coming from, but the charts are suggesting something on the lines of that occurring. Continue to watch it. Scrolling down to Japan inflation. So the land of the rising sun today witnessed an acceleration of inflation contrary to the cooling off in the West. The last dove in the world, which I call the contrarian central bank, is now on the verge of ending the negative interest rate policy. So here it is, core inflation, and look, we're starting to head higher in headline CPI. We have another wave coming. Is this the first wave? Second wave pullback, and then we get another move to the upside? I don't know. We'll have to wait and see. Very interesting data coming out of all these different areas. Eagleford average 2022 well EUR has declined 89,000 barrels, minus 32% since 2020. So here's Eagleford. There's 2020, 279 in terms of average well, thousands barrels of oil. We are way down there at 140 in 2023. Could we be seeing the beginnings of a decline in a lot of these shale areas? And how is production on a worldwide basis going to look like a few years out? Where is all this oil going to come from? Shale provided something on the lines of 10 million barrels per day. That is the same amount as Saudi Arabia. Saudi Arabia. We've added a Saudi Arabia of shale production. If this is starting to decline and it declines quickly, like minus 32% over a few years, we might have a problem here, Houston. We might have a problem. Here's nat gas. Europe turns extremely cold by December 11th. No signs of mild December. And I know I'm a natural gas bull, especially where we're at in terms of the ratios on nat gas. Now, weather is the only thing really holding nat gas prices down. So if we get cold weather, and I'm not saying that I want or prefer cold weather, that's not for my investments. I'm just monitoring the weather to see, maybe it does get cold. Maybe natural gas prices are far too cheap. Equity funds just had their biggest 2-week inflow in almost 2 years. Inflow, again, I'm looking at everything and I see a lot of people who are calling for recession, pullback, slowdown. Well, why the heck are flows to equities having their biggest inflow in almost 2 years? More information. What's one thing you wish you knew earlier in life? Well, I mean, there's a lot of things I wish I knew earlier that pertains to investing that I know now. Ratios, market conditions, and technical analysis. I wish I knew all of that earlier in life. Jay Hinster says, for the gold-silver ratio, is there a pattern here, a fractal? You get a top, a squeeze, and then a breakdown. A top, a squeeze, a breakdown. We have a top here and a squeeze and a breakdown. I don't know. We'll see. Could be similar like the 2004 era. So we'll see what happens there. And this could be dollar related. The dollar could drop to the downside relative strength DXY, and push a lot of these dollar denominated assets higher. Brent put volumes hit a record. So usually when everybody gets on one side, put volumes is betting on oil prices going down. When everybody gets on one side, that's generally want to take the opposite bet. So everyone's on one side, they're over on the put volume, and most likely that's going to probably have to reverse, which means it'll be bullish for oil at some point. CNN, is there a pattern here? So breakout to the upside, coming back down, breakout. We've got another trend line, resistance line going across that we are breaking to the upside. We could see nice movements to the upside in hopefully uranium equities. Stock market breadth continues to show improvement. 55% of S&P 500 stocks are now trading above their 200-day moving average, the highest since September 1st. So we're starting to see the breadth come back. We've got a few indicators signaling a bullish move to the upside. Things could potentially be turning around. People aren't paying attention. The three key ingredients for building wealth: compound interest, consistent contributions, long-term mindset. If you're missing one, the other two won't work in your favor. In order to take advantage of compound interest, you have to have a long-term mindset. And it's always best to have consistent contributions, which some people would say dollar cost average, something on the lines of that, because you can invest in companies when the market is down. What a lot of really good investors do is they don't do consistent contributions into the investment. They wait for periods of fear. Then they dump a bunch of money into the markets when everyone is fearful. That's basically how Warren Buffett invests. He waits, he accumulates cash, and he puts it to work when everyone is crapping themselves in a fear environment and a good market condition for new investment. The market is a wealth building machine for patient long-term investors. That's what I've adopted over the years. Step one of building wealth. Wealth 101 book. Spend less than you make. I just thought it was funny. 72% of millennials and 67% of Gen Z say money can buy happiness per empower. You know, I think that's probably true if you don't make a lot of money. So that would probably make sense. But you'll hit a certain level where money can't buy happiness. Where is that level? It's different for every person. Freezing weather to grip North Europe, says Bloomberg. Minimum temperature fall below zero in Berlin from Saturday. Parts of UK to see wintry showers, heavy snow seen for Alps. Maybe winter is coming over there to Europe, North Europe. Chinese property loans declined on a year-over-year basis for the first time in history last quarter. Now, these guys have a demographic problem. You look at their demographic, it's contracting. I'll just put it that way. There's a lot smaller demographic between the demographic that just went through home buying years. So I think that China is going to go through a very rough period with their property markets, their real estate markets. Reverse repo declined over $60 billion today, down to $865 billion in total, now down over $1.6 trillion from the high. The reverse repo has been adding liquidity to this system. And if you look where this started to decline in about May of 2023, that is the exact moment that the M2 money supply started to decline. And the M2 money supply has been declining at the same rate that the reverse repo has been sucking money out of it. Just an FYI. Junior silver miners legitimately broken out from a 7-month bullish descending wedge. But so far, it did not produce any super 8 to 10% move, which it usually does upon a breakout, which is a big surge in a breakout of a falling wedge. We've seen the surges in a lot of the companies that we invest in on the website in big falling wedges. You see these big uh, surges out of patterns, and people are like, "Wow, that went up, 30% in a week or two." And that we haven't seen that yet, but sometimes they kind of spill out of the falling wedge. They consolidate a little bit more, and then they rip. So I think that's coming for junior silver miners, especially if we can get silver to break its big long-term downtrend line at about 2450-ish. Reverse repo plunged to 865 billion, down 65 billion in one day, in one of the biggest liquidity injections in RRP history. Also fast approaching the 700 billion reverse repo liquidity constraint level. So it's coming. We might run out of the reverse repo cash in there, the liquidity in there, pretty soon, a few months. 40% of Russell 2000 companies now have negative earnings. Just 17 years ago, this number was under 20%. In other words, since 2006, the number of small caps with negative earnings has more than doubled. This is not sustainable. 40% of the Russell 2000 companies have negative earnings, and that's the slowdown in the market. Now, is this going to kick back up? That's the question. Are we going to get a surge here? Markets are forward looking. A lot of people are looking at lagging data. This is lagging data here. The leading data is prices in a lot of these different sectors. That's what JC Parrott's and those other guys up top were looking at, and those indicators. Uranium, the miners are doing well following my 3-year-old forecast, but there's likely to be much more to come to the upside. Let's see if we get all the way up here in this possible later target area. And that's the top of it's 125. We're still, it looks like, to be around 30 bucks. That's still a huge move to the upside. The Global X Uranium Miner ETF. SILJ breakout. We saw that other chart there, but this is the breakout of the trend line. That's the one that I look at in the way that I view it. Next week, we'll see if gold has its highest monthly close ever. It's looking good. Come on, baby. Let's close this thing at a high price. Something wonderful is going to happen in silver during this intermediate cycle. So Gary's getting all bulled up. We've got silver moving on higher of a flag pattern or a channel breakout. Let's see if we can get up into the 40s, guys, towards end of this year, early next year. Remember, silver, when it breaks, it can move very quickly. So keep that in mind. Here's another one on silver. On another day marked by remarkable resilience in silver prices, the diagram serves as a crucial reminder for investors regarding the extensive demand-related opportunities for the metal, especially in an environment where the supply remains remarkably constrained. We've got silver in the middle. We've got green revolution, historically undervalued, monetary metal, and an inflationary asset. Perfect. Let's ride this thing in the middle here, guys. And that's where I am going to end it. So that's what I've got for today, guys.